Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Vinny Motiwala. And if you look at the markets right now, it's holding quite steady, actually building on to gains. 19,450 is what we kind of scale on an intraday basis. From there has been a bit of let-off just in the last few minutes, but at least 19,400 has been held for now. It's the broader markets which are outperforming today, case in point being mid-cap as well as small-cap indices. They continue to, eke out gains. In fact, small-cap index is at record high levels, but it's a Bank Nifty which is underperforming. So let's pull up those factors as well, because Bank Nifty is the one which is on the back foot today. Real estate stocks have seen a bit of a bounce back, led by the moves that we have seen on Prestige as well as Brigade Enterprises. So a couple of these counters from the real estate pack is in focus, and then pharma is in the pink of health, whether it's an Alchem Lab or an Ipca Lab, or the kind of moves that we are seeing on Zydus or Abindo Pharma. All of these names are actually gaining. ICICI Group stocks, on the other hand, are coming under a bit pressure. So whether it's Bank, Pru, Lombard, there for you on the screen, all are down somewhere between 1 to 2%. So we are just watching out for that stock. And of course, earnings galore. So take a look at the earnings reaction also coming in. You have Apollo Tyres, Alchem Labs as well as Gujarat Pipavav as some of the top gainers. While on the losing side, it is names like Idea Forge, Reliance Industries as well as Supriya Life Sciences, which is coming under pressure. So that earnings scorecard should come up for you on the screen as well. But Vinny continues to be very, very stock specific, because at index level, we are holding okay.
Absolutely. So more stock specific, and when you look at it, some of these individual stock, that's the scorecard also, and you can see how that we're seeing a weakness coming in for Idea Forge, Rain Industries, Supriya Life Sciences as well. So yes, more stock specific, Anisha, when we talk about is HPCL also individually. That's a stock that has been in focus today, buzzing in trade. CLSA actually has upgraded the stock to a buy. They've given a target price of 345 as well. And not only that, let's not forget the oil prices also, right? They are at a 3-month low, but this comes into play only if it stays for a longer period of time, that the oil prices stay at these levels. But yes, nonetheless, HPCL in focus after the brokerage note that has come in from CLSA. Let's move on and talk about Adani also. When you look at the Adani names, Adani Ports also, that is also in focus, and keeping an eye on that. As of now, trading with an uptick of almost 2.6%. After we're seeing that US is going to be investing $553 million, the funding for Deepwater West Container Terminal in Colombo, the DFC's largest investment in Asia, and this is to promote the regional integration between India as well as Sri Lanka. So that's keeping the stock pass as well. And lastly, let's not forget some more earnings impact is what we're seeing is from Cummins as well, where we're seeing that the revenue seen a slight bit of a downtick there. But other than that, look at the profits of the company, a 23% growth coming in the profits of the company, Anisha. So a lot of stock specific moves that continue to be on the exchange as well. And overall, the market has been in that range of stock-specific news.
Yeah, for Cummins, actually just wanted to highlight the kind of commentary that we heard on the con call, because that's the reason we saw that 4% upsurge. They're talking about a double-digit growth in FY24 as a whole, plus the fact that the entire transition that we saw in terms of the CPPB engines, that's playing out well, and there is some sort of stabilization there. But since we're talking about HPCL, which has actually managed to gain almost 10-15% on a 2-day basis, let's go across to Somit to get an understanding as to what is the reason for the same. Is it just the fact that the earnings were strong? Is it the fact that the commentary is good, or the fact that crude prices have come off and the entire oil marketing companies are doing well? Somit, what is the reason actually for HPCL to gain?
Multiple reasons when it comes to the oil marketing companies, and specifically HPCL. For HPCL, if we talk about the earnings were good, the commentary, one positive thing coming out from the commentary was the fact that the company clearly said that the debt has peaked, and rising debt was one of the key concerns when it comes to HPCL. And there were a couple of brokerages who have actually upgraded HPCL to buy. It was CLSA who have upgraded their rating to buy, and Morgan Stanley has also upgraded their rating to overweight from underweight on HPCL earlier. But the bigger fact coming in, or the positive fact coming in for all the oil marketing companies, is the fact that crude has come down to $82 per barrel level. Now earlier, when crude was at around $97 per barrel, the aggregate gross marketing margin that the oil marketing companies were earning on selling every liter of petrol and diesel was actually negative, which has now turned positive because crude has come down to 82. On petrol, they might be earning close to 4.5 to 5 rupees per liter, and on a diesel they might be earning around 1 rupee per liter, which was negative earlier at around 6 rupees, which means that they were losing money on selling every liter of diesel. And this fall in crude oil prices also removes the concern that given the fact that India is entering the election period. So going forward, oil marketing companies might not be forced to cut retail fuel prices, which would have indirectly impacted marketing margins more. So all in all, these are the positive factors coming in. But one thing that the street is still not factoring in is the fact that because of this sharp drop in crude oil prices, there could be inventory losses for all the oil marketing companies, that is HPCL, Indian Oil Corporation and BPCL. Moreover, this sharp drop in oil prices could negatively more impact the pure play refiners like MRPL and Chennai Petro, because they might have bought crude at around $97-95 per barrel, which now they have to sell at around $82 per barrel, which is the refined product that they have to sell, and because of which there would be inventory losses in their financials in the third quarter of FY24. But do remember that crude oil prices need to sustain at these lower levels of $82 per barrel for them to gain some, actually realize some gain from this lower crude oil prices.
Amit, thank you so much for that. That's a roundup on HPCL and why is that in focus as well, keeping an eye out on that. But let's bring on aboard our technical guests for today as well. We have Kunal Bothra as well as Neerav Cheda joining in with us. So very good afternoon to both of you all as well. And Kunal, I'm going to come to you first. And I want to just talk about some of these pharma names, right? We were talking about previously when we started, Anisha was highlighting how whether you look at an Alchem Labs today, Ipca, Zydus Life, even an Aurobindo Pharma, all those in the FNO space are actually holding on to that good gain or momentum is there in these stocks today, Kunal. How is it looking like on the charts? Anything interesting you're finding in the Nifty Pharma right now?
Yeah, the space is a lot more vibrant than last time around. We've seen good momentum. In fact, the names which you mentioned, the likes of Alchem Labs specifically, the stock in just the last 1 week or so, I think was almost at, there's almost a 15% to 20% jump into the stock price in just the last, I think, 5-6 trading sessions. Aurobindo Pharma today is a more high price action where the stock has come back about that 900 levels. Looks very attractive. Zydus Life is the other name which also I think has done reasonably well. It's come back to that 900 plus mark, I think 930 approximately for Zydus Life. So there is momentum which has come back into many of these pharma names. Looks very attractive as a setup because, when the markets are actually, rather when the indices are into a tight range as such, not too much of a price action on the indices. There's a lot more, vibrancy in terms of the mid caps as well as the market internals. Many of the stocks which you've mentioned, the likes of Alchem, for example, Zydus Life, etc., they look fairly attractive. May not be initiating a buy immediately at current levels, but I think with these kind of breakouts, what we can probably anticipate and expect is that this may not be a short-term breakout, but if in case these stocks correct by, say, a couple of percentage points, that could be a good enough entry point for someone who's missed out.
Okay, so that's the verdict as far as the pharma space is concerned. But Neerav, talk to me about the banking space. It's pretty much one step forward, two steps back for them because of the last 4 sessions, it has been gaining almost 1,000 points on the Bank Nifty. Today, it's given up all of those gains, underperforming quite a bit. And names like ICICI, Kotak, these are the key reasons for that. What do you make of Nifty Bank right now? And if there's any trade at the index level?
Yeah. So, see, on the Bank Nifty front, in fact, on the index front, if there is one trade that you want to take, it has to be on the Bank Nifty. See, Nifty is right now reaching a resistance zone. 19,500 is an important resistance area. Also, the highest call base is around those areas. But, shift to Bank Nifty just broken out above its 200-day moving average. There is considerable space for it to now reach, the 50-day moving average, which is placed around that 44,250, 44,300 odd levels. I do believe, even though today it's a little soft, this is one space which one should trade. In fact, on the longer side, one should look to buy Bank Nifty at current levels. I believe a lot of banks are now witnessing short covering action, and that will be very visible going forward in the next couple of trading sessions, where Bank Nifty will start to lead while Nifty will remain near this resistance areas. So yeah, one should be looking to buy at current levels, 43,400, 43,350, a good support area. So 43,350 should be a stop loss in terms of Bank Nifty spot, and 44,200 is where you will look to book profits.
Okay. But let's bring on board Siddharth Khemka as well, Head of Retail Research at Motilal Oswal as well. Good afternoon to you, Siddharth, as well. Before I come to you, I just do want to mark the numbers of Restaurant Brands Asia that's flashing on your screens as well. Net losses seems like a bit of a narrowing down that has come in the net losses of the company, still at 460 crores. Though margins, yes, that's seen an improvement. We're seeing the revenue seeing a growth of 19% as well. Keeping an eye out on this trend, because what has been working out right now in this QSR side was that, burger side, whether you look at a Westlife or Restaurants Brands Asia, which is Burger King, all that has been doing better versus something like a Jubilant Foodwork. Siddharth, my question is going to be on this QSR space. How are you seeing this QSR space develop, and how do you see this moving? Because the trend of burgers versus pizza seems like it's continuing even as of now. And plus, you do have those factors coming in of food inflation sometimes at some point of time as well. So, overall in this QSR space, anything that you find looking attractive, or, what are you looking at here?
Yeah, definitely. I think very aptly put in by you. There has been a case, especially in the last few quarters, where there is a clear-cut differentiation between the pizzas and the burgers. The burgers have definitely picked up pace, be it the Westlife, or we have the restaurant brand Asia, Burger King. They have reported steady growth in terms of volumes compared to pizzas, which are kind of struggling. Especially if you look at Jubilant Foodworks, the last time they refreshed their menu, they did really well. But in the current ongoing season, especially in an environment where you have the ICC World Cup going on in India, is generally we have seen that the demand has been pretty strong for QSRs, and that is also reflective in the demand that we have seen the growth uptake for companies like Zomato and Swiggy's. So overall we are very positive and constructive on the QSR space. We believe that this is a space which will continue to do well, and the increasing need for the quick eating at home, at restaurants, will only go up with the higher penetration of these restaurants in the tier 2, tier 3 cities. Within that, if you ask us what we like, so restaurant brands is something which the results just came in. Things are just improving. The company is yet to turn around at the net levels, and so that is something that we are expecting by FY25. The company should be able to start reporting profits, and that should lead to some improvement in valuations as well. So we currently have a buy rating on restaurant brands, which is a kind of, you can say, a high risk choice in the QSR space.
And while people are eating a lot more in dine-outs as well, there's a lot more delivery, because you're seeing Zomato as well reporting good set of numbers. And if you look at the last week performance of Zomato, and we should perhaps pull up a 5-day chart, you'll see that that stock has managed to gain almost 15 to 20% as well, now sitting at 125 rupees. So, okay, that's a 7% gain coming in this week so far for Zomato. But Siddharth, what's your view on real estate? Should one start getting careful and book some profits, or given the fact we're coming out of, decade-long consolidation as far as the fundamentals are concerned, there is going to be a longer cycle on the upside here?
Definitely, Anisha. I think if you look at the overall real estate sector, the sector is coming out of a decade-long glut where now finally the demand is outpacing the supply. Realizations have improved, and the pace of absorption, if you look at any of the pre-launches, they're getting absorbed pretty quickly by the market. And all this is happening at the time where interest rate cycle has kind of moved up and is peaking out in India. So that shows the kind of strength in the demand for real estate, especially in the residential side in India. If you look at some of the data points, the top 8 cities in India, the demand is at almost 9-year high. In terms of the pre-sales operational numbers, most of the real estate companies have been reporting record pre-sales operating numbers, and that is supporting their overall, you can say, the financials. There has been some concerns with regards to in the previous few quarters with regards to the increasing raw material cost, but now that has also kind of leaned off and kind of supporting. Next year, if there is a rate cut, whenever that happens by mid of the year, or say by April, May, that will again add to the overall sentiments for the real estate space. And if you look at some of the niche pockets, we definitely like the Mumbai region, where our preferred picks are a Godrej Properties and Lodha. They have moved up sharply in the near term, and hence we could see some consolidation. But the long-term story, we feel that for the next 2-3 years, there could be good upside and good delivery in terms of performance from the real estate players.
Okay, that's the word coming in on the real estate players. But we're going to slip into a very short break. But as we go into the break, my colleague Sumit Chaturvedi actually managed to speak and caught up with Hero Motors CEO Niranjan Gupta, as well as he also spoke to Mr. B. Govindarajan, the CEO at Eicher Motors as well. Listen it.
We're here at EICMA Milan 2023, and guess what? The show has been kicked off by an Indian company, Royal Enfield. Well, it started the show by showcasing its electric bike concept. It has got the new Himalayan here also, which is being showcased, and other bikes. But what are the European plans? What is happening here? How important is the market? To talk all that and much more, we are joined by CEO of Royal Enfield here in Milan. Well, thank you for talking to us.
Pleasure.
Let's begin by talking about the significance of this market. Can you tell us in brief, how important is this market for you?
Europe is a very important market for Royal Enfield. In fact, UK in the Europe, actually we see it as a beachhead for Royal Enfield. That's where everything started at Redditch, and anything which is being done from our motorcycles or from a brand in Europe, it is actually get picked up by the consumers across the globe. And that way, we are always like to be present in this whole of Europe. We are a company, we would like to always build community, and we work with the community, we ride with the community. That's how it is. It's all about the community building. In Europe, we actually have a rider community which has almost about 20,000 plus people who have signed up to this, and that's how the brand is actually getting accepted in Europe. Every year we are in EICMA, we use this platform for launch of our new motorcycles and all those things. In Europe, our market share as of now is almost about 8.5% in the middleweight. And in the UK, some of the motorcycles, we are the number 1 position. And in Italy, we are almost about number 3 position. And Germany and all other areas, we are at about number 4 positions in the middleweight segment. And that's how we look at it, the Europe market, which is it's a good market for us to grow. Along with the community and the brand building exercises, we have almost about 600 and odd numbers of the total retail outlets through which all the motorcycles are being sold. We sell our 650cc Continental GT Interceptor, we sell our 350cc Meteor, Hunter and Classic, and now the Bullet, which was also very recently transitioned to the J platform.
So this is an EICMA. EICMA is of course the globe's best auto show. And we have unveiled today a lot of vehicles in the premium segment, motorcycles, scooters, and also on our EV ranges. We've also announced our foray commercial operations, which will start around middle of next year, into Europe and UK, starting with France, Spain, and UK.
And talking about expanding further into global market, UK and EU are here. Electric vehicle, this one Vida you have brought in here. Tell us more about these products. What makes them special and how will you compete with the incumbents here?
So the point is, as far as this EV category is concerned, even in Europe and all in two-wheelers, it's in the nascent stage. It's not really taken off in a big way. Charging is one of the key constraints that we see. And our product has got removable batteries, and that makes it easier because you don't have to depend on the charging stations. And therefore, we feel that this kind of product is more suited for the European and UK markets.
How big is the market? How lucrative it is?
See, the point is market's attractiveness is not always defined by the scale. It's defined also by strategic importance and image building. And we feel that our foray into developed markets like Europe and UK provide us that imagery.
There's the pricing power, the yield, the margins, are they also good here in Europe?
As I said, our objective here is more to drive imagery, and as we foray into that, then of course margins will follow. But it's like for strategic considerations, there are markets that will give you scale, but there are markets that will provide you that image and those feedbacks that you require.
And currently, you will bring them from from India.
Yes, we'll be bringing them from India.
Welcome back. Well, you just heard from the managements of Hero MotoCorp as well as Royal Enfield as to what they are making of demand environment, and it's having an impact across the supply chain as well. Earnings for Apollo Tyres were also very strong, and of course the margin profile is something which has been quite stellar across the entire sector. But for Apollo Tyres, what's the verdict on the street from brokerages, and what are they expecting in terms of growth rates going forward? Let's go across to Sharad to find out just that.
Well, yes, a very strong set of numbers coming in for Apollo Tyres in the day's trade. Also, the stock is up almost 7% in trading in the day's high levels. And of course, look at the margins front, that has been very strong, almost up 651 basis points on a year-on-year basis. And also sequentially, there has been a strong growth. Also looking at the revenue, that has been also going up by almost 6% but the entire EBITDA beat has been coming for two reasons. This is of course on the higher gross margins coming in because of the reduction coming in the crude prices also, which the benefit was passed on in this quarter, and also there were certain cost saving measurements as well. And overall the entire number was beat, and both the markets, be it the Indian markets as well as the European markets, they did show very strong realizations. That's why the profitability was also strong. The net debt level, that has been flattish roughly at 3,800 odd crore rupees on a sequential basis, but the cash flow generation, that has been strong. Now looking at the tyre stocks, the entire pack as a whole, Q2 numbers were very strong, be it JK Tyre, Apollo, MRF as well as CEAT, where most of their sequential basis growth has been ranging between 90 to almost 330 basis points when it comes to the EBITDA margins. Now this is of course for the standalone business, and if you're looking at the valuations front also, they are ranging between almost 10 times to 14 times the 12-month forward P ratio.
In fact, let me toss it to Siddharth as well. Siddharth, you heard the commentary from the managements. The numbers from the tyre companies have been strong. What do you make of this? And if I had to ask you for a top bet within two-wheeler space and tyre companies, which two stocks come to mind?
Yeah, Nisha. So I think definitely we are looking at a constructive view on the entire two-wheeler space. If you look at the passenger vehicle segment within the auto universe, that is something that has been consistently doing well. But of late, we have seen good recovery, especially in the festive season, where demand for some of the two-wheelers have been pretty strong. Some of the niche players have reported good numbers like Eicher. But the foray into EVs, that is helping companies like TVS Motors to show a stronger growth. If you look at the entire two-wheeler space in terms of valuations, Hero Moto continues to trade at a steep discount to something like a Bajaj Auto and Eicher, and hence overall, if you look at the recovery in the two-wheeler space, the recovery in the rural segment, and the strong festive demand, we believe Hero would do preferably well because of the valuation comfort as well going forward. And that followed by Eicher would be the two preferred picks within the two-wheeler space. Now coming to the tire segment, again on back of strong OEM demand, tire companies have been reporting strong numbers, and to add to the overall profitability, the margins have also been supportive with the fall in the crude oil prices. So that is something that is again helping bulk of this the tire companies. So we had numbers from CEAT earlier, MRF, JK, and now yesterday from Apollo. So within the tire space, we prefer CEAT. We believe that the company has a very stable growth outlook, both for its OEMs as well as for the replacement demand. And the absorption of new capacities would drive operating leverage. Valuation wise is also comfortable at 13.5 times FY24 and almost like 12 times FY25 PE, and hence we have a good upside on CEAT. We have a target price of 2950. Apollo also we like. The numbers have been pretty strong, and as I said, that is doing well. We have the con call today, so we will be revising our estimates based on what they have declared so far. The margins improvement have been higher than our expectations. Again, something that we like within the tire space, Apollo. So our previous target was 500, which is also a good decent upside from current levels.
That's about the tire and the two-wheeler space. Thanks so much, Siddharth, for that roundup. Quickly, addressing the numbers of Raymond as well. They will just come up for you on the screen, because overall the expectation was that given the textile sector seeing a bit of a boom, that will be the case with Raymond as well. But for now, the stock seems to be reacting negatively, and I think that is because the earnings have been pretty much flat. We'll get more details in a bit, and then we'll address those numbers as well. But talking about textile and entire fashion space, Neera, what about the charts of Trent as well as Arvind Fashions?
Trend, if you look at the a little longer term chart, this stock is one such stock which hasn't really seen a downturn. It's a linear uptrend for this stock. It's a higher top, higher bottom formation which is going on, and I believe this stock will continue to move up. A huge rally has been seen for this week itself. It started the week at 2180 odd, and it's right now at 2450 odd. I believe this stock has it in it to reach 2800 odd levels. Having said that, if you want to buy, Trend, do not buy at current levels. Let it, consolidate or so, and come down to 2380 odd. That is when, look to buy with a stop loss of 2350, and then, your target becomes 2800. For Arvind Fashion, I believe this has seen a huge consolidation and is on the verge of a breakout. The breakout is around that 381, 382 odd levels. Once that level comes about, I believe this stock will actually become very aggressive. There you will see volumes coming in, good buying coming in, which can lead this stock upwards towards that 500, 550 odd level. So once that breakout comes in, look to buy the stock with a stop loss of around 360, and start to book as the 500 level approaches.
Okay, so point taken. That's the view as far as Trent is concerned. But Kunal, let's discuss the charts of Poonawalla FinCorp. I think you were quite positive on that one at the start of the day. Seen an uptick of 7%, but ICICI Bank doesn't seem to have gone the way you were anticipating. In fact, the entire group is stumbling.
Yeah, so I think ICICI Bank is something which remains to be a bit of a tricky stock. I would still believe that about the 50-day moving average, which is I think at 952 levels for the stock price, that could be a very good buy, because in terms of timing as well as in terms of a breakout, that could potentially be a very good breakout point for ICICI Bank. So I'll still hold my positive view, but I think about the 952 levels is where I would probably go with a stronger buy as well as increased positions for the stock. Poonawalla FinCorp, yes, the stock has done pretty well. Again, I think a stock which has retraced back, which rather had retraced back towards its 200 DMA, fallen by I think 50-70 points in the last 3 or 4 months from 450 odd levels, and now is trying to get into a bounce back process. So I believe that this could be a sign that a major bottom could be in place for Poonawalla FinCorp, and this level of 350-360 mark where the stock took support last couple of weeks, I think that could act as a major support zone for the stock.
Okay, that's the take coming in on Poonawalla FinCorp. Siddharth Khemka, we'll let you go on that note. Thanks as always for joining in. But Kunal, is that one of the closing ideas too, Poonawalla FinCorp?
So not really. DLF is something which looks interesting as a closing trade. I'm very bullish on the real estate pack, looking at this last 2 days of mild correction as possibly a good entry point from a short-term perspective.
Neera, what about you? What's your closing trade?
Yeah, so I have a couple of trades. One is Vatek Wabag. So this stock, if you see a little longer term chart, slowly but steadily this stock is moving up. Every time, it takes some consolidation and then moves up. Right now, a flag kind of a formation breakout has come in. After this consolidation, the breakout has come in, and breakout has come around that 500 odd levels. I believe this stock has it in it to move up towards that 600 odd levels. So look to buy the stock at current levels. 510 should be a stop loss, and 560 to 600 is where you can look at, as a target. The second stock is BEML. Now, this stock has witnessed a huge breakout. This is a breakout after a period of about 12 to 15 years. After 2007, this is the first time the stock is actually trading above that 1800 odd levels. Now, what really happens is when such huge breakouts come in, the stock doesn't really move up only 15-20%. It actually doubles, as the time approaches. This stock did go up, but it has come down to retest those breakout levels, and then again, a reversal is seen. I believe very aggressive momentum is likely to be seen in this stock, and this stock can actually reach up all the way towards that high of 2550, 2600 odd levels, and that should not take much time as well. So look to buy this stock at current levels. Your first target would be 2300, and your stop loss would be around 2100.
What was that, Nirav? Can you repeat the name, the second one?
BEML.
BEML, got that point. In fact, on that note, we'll slip in a very short break. Don't go anywhere. When we come back, we'll track the last 30 minutes of the trading session.
Back with closing trades right here in ET now. Let's just revisit what the closing trades are settling in at, because after a quiet start, we've not really gathered much of steam there. In fact, we did pick up a little bit, but then that uptick is getting sold into. It continues to really be the crude sensitives, which are the ones which are moving higher. Case in point being HPCL, which is now clocking 8% of a move. There's, of course, Apollo Tyres after its earnings, that also holding up 7.5%. And it's some of these mid-cap pharma names which are looking extremely lively. So Alchem, Zydus Life, Ipca Laboratories, they're all the ones which are also having a field day right now. But let's welcome on board Sunny Agarwal and get in some Diwali ideas as well. Sunny, hi, good to have you on ET now. Thanks for joining in. Just going through some of the buy calls that you're issuing out, and just wanted to get a sense on, say, names like Mrs. Bector Food right now. And I've picked up this one because you've already seen a massive rally in the stock year to date. How much more of an upside do you actually think the stock can garner on a 12-month basis, and what makes you so bullish on this story?
Yeah, good afternoon and thanks for having me on this show. So my price targets for Bector Food is around 1358. And as we all know, Bector Food is one of the leading player in biscuit and bakery category in the North India, with their biscuit brand being Cremica, and on bakery side, English Oven is the brand which they are riding the rally on. Looking at the success in North India, they are now expanding on a pan-India basis. So there are many plants which are likely to get commercialized over next 6 to 12 months. So one of the plant one of the line of biscuit in Punjab is likely to get commercialized in this quarter. Then there is a plan to expand the capacity of biscuit line in MP. That plant is likely to get ready by FY25. In addition to that, one bakery plant in NCR is with an estimated capex cost of 33 crore is likely to get commissioned by third quarter of FY24. And in addition to that, Khopoli, the company is scouting for a land in Khopoli, Maharashtra, where again the bakery product will be expanded. So what we feel is that for FY23, the company has reported net sales of around 1362 crore and net profit of 90 crore. So our estimate suggests that the company, the sales is likely to expand from 1362 crore in FY23 to 1891 crore, almost 1900 crore in FY25, and net profit of 90 crore from FY23 to 167 crore in FY25. So massive jump in sales volume and earning we will see over the next 2 years, and that makes us bullish on Bector Food with a price target of 1358 over that period of next 6 to 12 months.
Point taken, Sunny. So that was about, of course, Mrs. Bector's. But I find an interesting name from the real estate pack, Kolte Patil. Most of the houses and analysts are positive on a DLF, on a Godrej Properties, or even Lodha. You're picking up Kolte Patil. Why?
Yeah, so again, Kolte Patil, if you all remember, is one of the leading player as far as Pune market is concerned. And we have seen a very healthy traction in terms of the project launch pipeline as well as the sales. In addition to that, the Kolte Patil has recently ventured into the Mumbai market, and they are seeing a very healthy sales traction. So my price target for Kolte Patil is high 70 rupees with investment horizon of 6 to 12 months. We expect the company to deliver profit of 223 crore in FY25 as compared to 102 crore in FY23, and sales of around 1900 crore in FY25 as compared to 1488 crore in FY23.
So that was about Kolte Patil as well. Quickly running through some of the other names as well. You have Maruti, Ultratech Cement, Polycab, Kalyan Jewellers, Praj Industries, Good Luck India as well. But before we let you go, let's just talk about ICICI Bank a bit more. Has been quite a bit of underperformer. When do you see it coming out of the hiatus, and what levels are you watching out for?
Yeah, for ICICI Bank, I feel the company has delivered, the bank has delivered a robust set of results for Q2. So we have seen NII and net profit growing by around 24% and 36% to 18,300 crore and 10,261 crore. Second largest private sector bank in India, very robust asset quality. Although we have seen some pressure on NIM in this quarter, so NIM was down by 30 basis points due to repricing of the deposit and CASA market becoming more challenging. But what I feel is that with the product mix change in favor of high yielding assets like credit card loan, MSME and personal loan, the NIM and ROA going forward should sustain at the level of 4.5% and 2% respectively. At the current market price, the price to book is around 2.4 times FY25 price to book multiple. And although it is in terms of stock price, it is consolidating in a certain band. But what I feel is that on a longer time horizon, that is 6 to 12 months, one can see a price.
Sunny, sorry, cutting that interaction short. Thank you so much for making time for us. But we have a big exclusive lined up, none other than Karan Adani from the Adani Group, talking about what their expansion plans are with my colleague Ajay Sharma.
Project. Okay, so no, you're right. We are predominantly an India-focused company with infrastructure in India. We entered Colombo 2 years back and with the partnership of with John Keels and Sri Lankan Port Authority. We were always looking for a footprint in this part of the country, because today almost 50% of India's container movement comes, gets transshipped out of Colombo. And so we thought it was extremely important that for a company like us to have a presence over here in order to give a more surety on the supply chain for the Indian importer-exporter, and also to give the same level of visibility, transparency, as well as the same operational predictability as what we give in India. And the idea is that how do we help them to reduce that cost of overall logistics cost for them to do, for any importer or an exporter.
We were also discussing earlier in the day that this is a step in the logistics space here, but you eventually also have an eye on probably doing something around the power space, renewables over here. What are the possibilities?
So, as we have done with Bangladesh, we have set up a power plant in India, in Jharkhand, and then we are supplying electricity through transmission line in Bangladesh. We do see that there is a great opportunity to have wind farms set up in northern part of Sri Lanka, and then to set up a transmission line into India and export that power from Sri Lanka into India, renewable power. And that's what we are looking at. I think it's a great opportunity because the renewable PLFs that we get over here, especially in the northern part on the onshore, is same as an offshore wind farm. So we do see there is a lot of possibility, and the idea is that how do we start working towards integration of both the economies so that it helps. Interdependency always helps. End of the day, it helps in terms of the overall economics and the growing, making sure that your neighbors also grow along with you. So to bring that overall stability, it's always good that we work with our neighbors and we try to integrate as much as possible.
Karan, I was just going through your annual report of the Adani Ports. It's outstandingly written, I must say. The amount of detailed research. It talks about the two things I want to talk about. One is Vision 2025, which is talked about, which is more near-term and medium-term vision. And then you talk about 2030.
Sure.
So it has more strategic initiatives which you aim to take out there. If you could just, throw some light on that.
So 2025, two large immediate objectives that we are achieving. By 2025, we would be hitting 500 million tons of handling as APSEZ. And second, we would be carbon neutral company by 2025. By 2030, what we are targeting to do is to be largest port company globally, and also from an India perspective to be the largest transport utility. What does it mean by transport utility? We are sort of transforming the company. We are not just going to be a port company, but more of a solution company to our customers, and give them a solution for their logistics need all the way to their factory gate, and hence develop whatever infrastructure we need to do in the hinterland part of the country, whether it's rail, whether it's ICDs, warehousing, trucking solution, rail solution. So that's what we would be going towards, and so it's going to be more of a solution-based approach with infrastructure, with infrastructure embedded into it, and also technology embedded into it.
Yeah, I mean, I can understand clearly. It talks a lot about how you're going to integrate customers, what they want, engage with them closely, and become more solution oriented than just a port company.
Exactly.
So talk to me about how you're using the ports as a very key strategic logistic play, because up till now logistic only meant road.
Yes.
But what I see is, when I see the map of India and how you're operating or expanding, it appears that there's a pearl kind of a strategy at play. Can you talk more about it?
So if you see from India perspective, when you rank them, coastal is the cheapest mode of transport, whether it's coastal shipping or inland waterways, followed by rail, and then followed by road. Unfortunately, for a country of our size, still 80% of cargo moves by road, and that's why our cost of logistics is so high. And in order to bring our cost of logistics down, we have to shift as much as possible to rail, as well as to inland waterway and coastal. And obviously, port is an entry and exit for any for any importer or an exporter, and that is what we were looking at. That when you look at the whole value chain, port is a very small component, but that component gives us the visibility of the whole whole value chain. And what we have noticed is, because there are multiple players delivering all the way up to the plant, there is a lot of inefficiency in the system. And the idea is that using that information, how do we break down and how do we give a seamless solution so that we reduce the inefficiencies in the system?
I also observed that you are also kind of adopting all the best practices of New Age India, higher contribution of representation from women workers, much more technology imprint and automation. Can you talk more about that?
So, end of the day, ports, we collect a lot of data. What do we do with that data? And right now, nothing. But the idea is that how do we bring in more how do we start using that data? How do we start using that data to make better decisions in terms of operations, in terms of customer engagement? So a lot of work is getting done over there. And as I said, we want to create the technology layer, which from an importer or an exporter, or as a customer, you get a full visibility, live visibility of where exactly your product is. You don't need to call the port, you don't need to call any of our team members, but the idea is that how do you get full visibility, transparency into the system? And that is what we are working towards. And I think from our objective, strategic objective, we want to go greener, we want to be more efficient, and obviously we want to have more diversity into our workforce. So these are the three large objectives that we.
One last question from the stock market perspective, because your stock over the period has created a lot of value for long-term investors, and I saw a very high degree of focus in your annual report about efficiencies. The word efficiency was repeated. There was very clear focus on ROCE and asset light. So what's the transformation on the business model that you're adopting?
So as you would have seen, we have given a 5-year roadmap. We want to be, we at the end of 5 years, we want our ROCE to be in the range of anything between 19 to 22%, which we are at 12% right now. The reason why we have given that is because the last 10 years we've used the last 10 years to develop and to create infrastructure. We believe that now is the time to really optimize, sweat the assets, and to squeeze and to get more efficiency, more operations out of it, and that's why we believe there is going to be a hockey stick in terms of a ROCE perspective. And efficiency is important because end of the day, if you're not efficient, we won't be able to help our customers derive better value and be more competitive in the global market. So that's why that's why there is a huge amount of focus in terms of efficiency of product, whether it's operations, whether it's turnaround time,
Business
whether
mix.
it is business mix, or whether it is even cargo loss. So what we have looked at is how do we help our customers reduce their cost of logistics, and then hence by doing that they will be more competitive in the global market. If they are more competitive in global market, indirectly we get benefited because there will be more volume for us.
Outstanding. Thank you so much for your time and inviting
Thank
us.
you.
Thank you.
Thank you so much. Thank you.
Right, that's Karan Adani speaking exclusively with my colleague Ajay Sharma in Sri Lanka, saying that they will be looking at wind power sector in northern parts of the country, of Sri Lanka that is, and will be exporting wind power back to India from Sri Lanka. That's the aim, and they're aiming to be world's largest port logistics company by 2030. Let's see what Adani Ports is currently up to, what that stock has been doing in trade, and what's happening with the rest of the market too. Standing quite strong there. About a 2.5% uptick is what you're seeing on that stock right now as we speak. Now let's in fact take stock of how the charts are looking here.
For Adani Ports, looks fairly okay. The stock has, I think, bounced back to its 50-day moving average. The stock has been relatively low to moderate beta kind of a stock. I think except for that phase in the month of January, February 2023, where the stock had seen a sharp correction. Post that, we've just seen the stock being into very narrow or a tight kind of a range. The correlation for the stock also with respect to Nifty is just, I think, 0.3, 0.4, which means that the stock moves in its own trajectory as well as own trends, devoid of how the underlying market conditions are. So currently also the chart looks quite okay. I would not be extremely bullish on the stock, neither extremely bearish. I think we can probably expect the range to be almost 780 on the downside and 840, 850 on the upside for Adani Ports.
So while we were watching that Karan Adani interaction, quite a few stocks have actually seen quite a bit of movement. So let's address that. Concord Biotech just came out with its earnings, quite a bit of improvement on a year-on-year basis, and that's the reason that stock had suddenly spiked 10%. So we're watching out for that. Take a look at Yes Bank as well. That's high by 8%. I'm not sure if I missed any news flow on that one, but taking a sudden spike and of course not an earnings reaction on that one. Piramal Pharma is the other one, very volatile. There was a large trade that happened on an intraday basis, recovered from that low, but nonetheless that stock is holding high by 3.5%. And then of course the latest kid on the block being Tata Consumer, that seems to have fallen below the issue price. I believe it's seeing a cut of almost 4%, and I think 323 thereabouts was the issue price as well. So that stock too is down in the trading session. Nirav, before I come to you for the closing trades and ideas, talk to me about Yes Bank on the charts and Piramal Pharma. Nirav, the question is for you.
So, Yes Bank, yeah. So, Yes Bank at this point of time, it's not really done much in the last couple of months, but it is making a good base. The base is around that 15.5, 16 odd levels. You're seeing every time it comes there, volumes come in, good buying goes on, and then it bounces back. This recent bounce, it is important, the stock moves above that 18.80 levels. Once that is crossed above, which is the previous swing high, that is when, you will see further buying coming in. Probably this stock will then, look to test 25 odd levels, which was, the last 6 months high. And, till then, I would not be surprised, if this stock comes down from 18.8 levels. Still, I believe, some sort of consolidation is still pending. So, doesn't look that great at this point of time. Only a breakout of 18.80 is when you buy. You can keep a stop loss of around 17.5 post breakout. The second stock, Piramal Pharma, that looks much better actually. This stock came down ever since, it listed at 180 odd levels. It came down to 60, but then huge amount of volumes have gone in. Post that, higher top, higher bottom formation is taking shape. Just recently, a flag kind of a formation breakout has taken shape here. The breakout has come in at 105. We've also given this stock as a Diwali pick, one of our Diwali picks. We believe the stock can come up towards that 135, 140 odd levels, and that is the target at this point of time. You can now keep a revised stop loss of 110 for your longs. It looks good at this point of time.
Okay, so that's the take coming in on some of the names. But let's take the BTSC ideas as well. Kunal, what's on your BTSC radar?
So I'll go with the contra buy on SBI Life, a stock which has fallen over the last 4 or 5 days by 50 or 60 odd points. So I think a 1350 odd mark looks attractive for a target of 1388. Stop loss could be kept at 1330. And Dixon Tech has been something which I've been bullish on. The stock is confirming a breakout of a flag pattern on the hourly charts time frame. So nominal target of 200 points on the upside, 55.50 as a target. Stop loss at 52.50.
What about you, Neera? What are your top recommendations right now as a BTSC trade?
I think I goofed up a bit. I thought, earlier you had asked about BTSC. I already told them to you, Wabag and BEML. These are my BTST trades. I believe these stocks can do very well. But apart from them, I have another one called Bear Crop. So Bear Crop, looking at this stock, a 2-yearly downtrend, was taking shape. A breakout came in at 4,800. The stock went up, retested that breakout, and now this stock is ready to move up towards its all-time highs, which is around the 65, 68, 600 odd levels. So I believe Bear Crop can do very well going forward. It can probably be a BTST as well. You can look to buy the stock at current levels. You can keep a stop loss of around 53.20 for your longs. I believe from a near-term perspective, 57.20 to 5800. These levels are good levels. This stock can reach probably in a day or two. So look to buy this stock for those targets.
Okay, let's begin winding up for the day. Nirav, Kunal, both of you, thanks so much for taking the time out and joining in. We're closing in absolutely flat, some amount of consolidation, a little bit of a negative bias for the Nifty Bank as well. ICICI Bank actually, that slipped about almost 1% today, so I think that's weighed heavy on the way the Nifty Bank has performed. And I can say the same about Kotak as well as IndusInd Bank and HDFC Bank too, which have done nothing today. Axis too, and along with SBI actually is closing in absolutely flat on the futures. Other pressure points today: BHCL, Delta Corp, Idea, Bharat Forge, Piramal Enterprises. But on the flip side, BPCL, Adani Ports, Asian Paints, Apollo Tyres, they've all been quite a fair bit buoyant. But that's pretty much it on this edition of Closing Trades. We'll catch you again with all the market action tomorrow morning.